experience which has been bad. So I thought if I share that with you, you might sort of understand the inner workings of a bridging lender, and maybe you could benefit from that, because I've definitely learned a lot. So I'm going to start with one of my first commercial developments that I was looking to get into, and that was land development. I don't know if anybody remembers this. This was about 12 months ago. Does anybody remember it from the room? Jordan, you might remember it. So that was for 750,000. Put an offer in that for 690,000. Well, actually offered lower, but I got an offer accepted at 690,000. And that's probably the vendor was very stubborn. Also, the agent was absolutely terrifying. And to be honest with you, that's still on the market, and we've cut our losses from it. But hey, if you want to purchase this deal, it's in Bradford, it's a farmland, go ahead. So with bridging, what you primarily do with bridging is more asset based, so it's more to do with the security, not like a mortgage where it's more to do with your personal income or your personal situation. So we had equity in our commercial property, and we decided to use our commercial property as a security to get the loan to purchase the land. And we used, well, I went to my broker, it wasn't Michael, it was somebody else. I went to my broker, got a few lenders together, and we started working with a lender called Assets Capital. Anybody heard of that? Heard of them? They're a peer-to-peer lender. We got a really good deal with them. So I think one of the mistakes. Yeah, this is a gang from Newcastle. So as I was saying, we used our commercial property to bridge for the purchase, and one of the main problems we had was because we're selling that commercial property for around £1 million, the actual lender took that as the value of the property. So obviously I didn't know that then. Now I know I should have really given him a sort of valuation that made sense. So as you can see, this is the decision in principle. We got a gross loan amount, which was £700,000. So when you do bridging, you get a gross loan amount. So what they do is they deduct the interest from day one, fees and everything. So it's not something you pay on a monthly basis. So as you can see, those were the deductions. It was a 6-month bridge, and that was our net advance, which was £650,000. I know I mentioned I was looking to buy the land for 690, but we also got development finance through them. Because what they do with development finance, they also contribute towards purchase costs. So as you can see, we had more than enough committed to us. So just to let you know what kind of deal it was, it was 8.9% per annum, simply around 0.7 to 8% a month, which is quite a good deal for bridging, because normally you get bridging which is normally 1% plus. But obviously it's getting competitive now, the rates are sort of going down. So that was the development finance, but I just wanted to show you that, so it sort of made sense that we had the money to purchase it. So this was like the simple breakdown. So the purchase price was for 690,000. We had a net advance of 650,000, but the rest was going to come from development finance. The loan to value on that bridge was 65 to 70%. Like I said, they valued on actually our sale price, and the term was for 6 months, 8.9% per annum, and the interest was rolled up. Anybody know what rolled up interest is?
Charge you at the end.
Yeah. So you don't have to service the interest monthly. So what do you think happened? That threw a spanner in the works. Down valuation. We got down valuation on the land and also on our commercial property. So the difference between when a residential property is valued compared to a commercial property is a commercial property is valued more on rental income. A little element of bricks and mortar, but residential is more bricks and mortar. So that's, well, they sort of look at your rent roll, and our rent roll wasn't the best. And we thought we needed to get a valuation near 1 million, but that was way off, 450,000. So you can see we ran into a problem straight away. Also, the land, which I was going to purchase for £690,000, was valued at £450,000. So I wanted to show you that because if you go into land development, the land prices are inflated. Anybody notice that? They're very inflated. So you can see the difference between 450,000 to what they were looking for, which was 750,000. But we actually got the GDV sort of spot on, which was I'm quite happy about. But obviously we wanted to purchase it, so it was all based on land value and also the value of our commercial property. So my broker came back to me and he goes, Mohammed, we can only lend you £500,000. And now £190,000 short. I thought, what the hell am I going to do now? And you know what my broker did? Normally a good broker would help you, maybe try and help you raise that, but he just left me to it. He just left me with my vices. So, and what do I do? So I knew Michael at that time. Michael will bring you in. So I go to Michael, look, this is my situation. Sorry? Well, you sort of helped me with this, didn't you?
Oh, sorry, yeah, you did.
Yeah, you did. Sorry. See, you're not listening to me, are you?
He's talking,
So, so yeah, I showed it to Michael, and Michael goes, okay, you've got a valuation up to £500,000. I can actually find you the rest of the money you're looking for, and we have to add more property in as our security. So Michael did find another bridging lender that would lend us the difference, but I think because it went on for so long, the vendor was stubborn, the agent. Do you know when they say you have to kiss a lot of frogs in property? I was kissing this frog for 8 months, and that was probably one of the, I won't say toughest things I did, but it was a good experience for me. So I thought, is it worth my emotional energy? Is it worth what we're paying for it? This is our first commercial deal. And my dad was very risk averse, so I had to sit down with him. It was a very difficult conversation, but we had to cut it there. So we decided, even though I got an offer from Michael, we decided to cut our losses. So I wanted to share that because sometimes this happens when you go for bridging, when you're looking to purchase something. You know, there's things that come that you're not ready for. You know, it's not all plain sailing.
No, just a quick question on that. Is that your GDV there, 2.67?
Yeah, for actual development.
So roughly that land cost you would think would be about right. You were talking about the theory being, you know,
exactly.
about a third.
Yeah.
Would be the land cost.
That's what purchased the deal.
Yeah,
I think you know the agents, they kind of they sort of work out on a third.
Yeah.
So normally, I think Paul would know better on that.
It's a bit old hat, is that these days?
Is it?
Yeah.
Yeah.
Yeah. So
I
obviously,
would never go on that.
no. So that's what I mean. I only knew after the valuation. This was my first land development that I went after. So this was a good learning curve for me. So yeah, so this is the good side of a good bridge. This is our current purchase at the moment. Yusuf, you might recognize this. It's in the centre of Newcastle. So this one, the difference was I was on my own then, but this time I had a very experienced partner on board. And he already built relationships with the bridging lenders. So he's already done business with them and also had repeat business done with them. And they knew who he was, his experience. So what we did with this bridging lender, the Goldcrest Property Finance in Manchester, we actually went to the offices, so we sat down with them, we were around the table, like boardroom, it was like Alan Sugar. We had a chat with them, and there and then they gave us terms on the loan. And the next day we got the formal offer, and then it took us up to about 7 days to bring the drawdown or to get the money in the bank. The reason we use this, guys, because we needed speed and we needed certainty, and it worked for us. And one of the great things that they offered was, can anybody guess it? What was that caused the problem for me in the first place?
Valuation.
Exactly. So they took no valuation. So I'll put this completion statement on so you kind of understand. So this was when Goldcrest, they gave the funds to their solicitor, so this is what they do. So £400,000, that was our gross loan amount. As you can see, they take away the loan arrangement fee, so they take that on day one. 4 months interest and all of the fees. it's not something we had to put in, but it was all within the loan. Does that make sense? So then the balance was then transferred to our solicitor. And then our solicitor obviously netted it down to what they needed. So we had to get our commercial property, they needed first charge on the property, so the loan needed to be redeemed. So that was the amount, disbursements, and then that's the payment for the actual purchase to exchange contracts on the building, and then their fees and so on. So I was left with £732 in my pocket. Bit of shopping. Yeah, but I still owe that back. So I'm sharing that because there's massive difference in situation in both. So one of the advantages I had with this one, because obviously I had a partner who had a relationship with the lender, and we went straight to decision makers. And this is obviously an opportunity tonight. Obviously Jamie's here. He can speak to a real person
What's
rather
cheaper
than
than these lenders' flats?
can actually speak to a real person rather than, you know, a screen or phone or email or whatever. There's no valuation required, which was absolutely perfect for us. We paid that with higher interest rates, so it was 1.75% per month. But with bridging, it's all about the deal. So if you feel it works within your deal, then, you know, go for it. And we needed speed, so we got 7 days from meeting to drawdown, and we got what we needed, which was deal secured. So all in all, it was a sort of perfect scenario. So just to finish off, so you guys get some value. This is the lessons I learned, and this is how I would approach it. This is just my opinion. Don't hold me down to it. I'd initially secure the deal, exchange contracts first if possible. Because I've learned one thing when you're dealing with agents, when you're dealing with vendors, there's two things they're looking for, or maybe three things. There's money, contracts, and surety of sale. That's all they want. It's not rocket science. And if you can give them that, then jobs are good in. So I think with the first one, my problem was that from the moment my offer got accepted, there was like 7 to 8 months. I did exchange and completion. I was looking to do exchange and completion at the same time. So it was quite a long way away. So within 7 to 8 months is a long time in property. So much can happen. Buyer could get cold feet. You know, agent can start playing up. You know, everyone wants their money basically. So one of the things is try and secure the deal as soon as you can, if you can. And also try and not do everything together, try and delay the completion so it allows to separate your lending, so you can get your purchase out of the way first, or maybe secure the deal first. Then, as long as it's secured, meaning you're legally binded to the deal, and not anybody can come in and nick that deal off you. But then the only problem with that is you're legally binded, so if anything goes wrong, it could get messy, but you know, I'm sure it's something you can gauge. But yeah, then anything that goes wrong in between, then you can sort of take your time and relax and sort that out without having the problem or the worry of losing the deal. Expect down valuation. Just put that in you. Just expect it. And have a contingency plan in place. Because if you don't, then it's just going to eat up in your time. And if you can help it, try and roll your interest payments up for however long you need to. Don't think, oh, I'm only going to do 2-3 months because I'm going to pay more interest. No, protect yourself. Try and roll it up as much as you need. It might cost you a bit more, but you're safe, or safe-ish. And leverage relationship of others for lending. So if you're new into this, I'm sure you know someone that may have gone to lenders or they've got relationships, use their experience or use their sort of relationship, leverage their relationship, or maybe use a experienced broker who's got relationships already. And the only way you're going to get quick funding, good deals, is do as much repeat business as you can with one lender. Don't hop around to multiple lenders. Try and do as much as you can with one lender. And that will continue to build and show experience to lenders, because more doors will open to quicker funding. So, to conclude, bridging can be a powerful tool if used correctly. So, I know who finds bridging scary? Who's had horror stories about bridging? Yeah, but who? well, to give you an example, well, when you're looking to purchase something and you're looking for a joint venture partner, how long would you think that would take someone to actually give you that money?
6 months.
Yeah, 6 months, okay, both of that. Is that good time? Anything can happen in that 6 months? Yeah, with
8 months.
8 months, yeah. You know, because we can do bridging, it's a good thing. I don't know, I'm not one of them types that can go sit down and grab a coffee, start schmoozing. I can't do that because I can, but then you got to look at it the other way where if you start doing deals quickly, then people will see that you're doing deals and joint venture funding will come around to you rather than you looking for them. So if you can, try and use bridging, it's a powerful tool. That's the end of my presentation. So hope you found value, guys. Thank you.